Accounting equation. Accounting equation is based on dual aspect concept. Under this concept, the sum of asset is always equal to total equity. The total equity means owner's fund, owner's capital. This reflects the fundamental accounting. The equities is equal to asset. The equity means owner's capital. The assets or the economic resources owned by an enterprise as well as the claim against insider. Okay. The equities refers to all claims or rights against the assets of an enterprise. The claim against assets may be external or internal. The external claims are outside equities and the internal claims are owner's equity. Owner's equity means owner's capital. The outsider's equity is the liability of business and owner's equity is capital of the business. See, the outsider equity is the liability of the business. See, liability, what the term liability means? The liability means you have to repay that amount. That is called the liability. Owner's equity is the capital of the business. This can be expressed as follows. The internal claim plus external claim is equal to asset, or the owner's equity plus outsider's equity is equal to asset, or capital plus liabilities is equal to asset. Assets minus liabilities is equal to capital. Assets minus capital is equal to liability. This is mathematical relationship we know that actually. The business, let me have one example. The business started with cash, rupees 10,000 rupees. So here asset cash is equal to liability plus capital. Here business started with cash. Business started with capital. So capital 10,000, at the same time cash also 10,000. Second transaction, machinery purchased on credit. Machinery purchased on credit. Here the two accounts are related. One is machinery purchased on credit. This is not a cash transaction. This is a credit transaction. Okay. Now machinery purchase. So we have machinery. At the same time, creditors also we have, because we purchase a machinery on credit. Okay, we have to repay that. So the creditors, the liability will create. So asset is equal to liability. Asset machinery, liability creditors. Creditors means you have to repay that. See the second transaction. Wages paid. Wages paid. The two accounts are related. See, wages and cash. Wages paid. Okay, ba? See, wages. You know that it is an expenses. Wages is an expenses. Okay, ba? See. Cash less 2,000, then capital less 2,000. Why we less this cash? Wages is an expenses. You have to pay. We can't neglect this. So cash minus 2000, at the same time capital also minus 2000. See the next one. Interest received rupees 1000. Interest received rupees 1000. Here interest received. So what comes in? So we have three rules. We already studied: real account, nominal account, personal account. So under real account, what comes in debit? Isn't it? So what comes in debit? Interest received. So amount, rupees received. So asset side plus cash 1000. At the same way, capital plus 1000.